All right, guys and gals, welcome back, welcome back. It's about that time of day again, 7:35 Eastern Time. Welcome back. Good morning to you too, Steve. Good morning out there. Welcome back to our morning prep. My name is Joseph James. I'm from School of Trade. I'm here with Traders Audio. I'm here with Marty Errico from Traders Audio. Marty will be braving the elements down in the NYMEX exchange this morning, and I'm here in a comfortable home office all the way across the country in Los Angeles. I'm going to begin this morning with a top-down approach to a technical analysis look. I'll be opening up charts. We're looking at the technicals that are giving us the clues, beginning with overnight and London's trading session. Now, my job this morning is to find some high percentage trading opportunities starting at 8 a.m. Eastern Time. So what I'm going to do is I'm going to start with a slower time frame chart, work my way down to a faster time frame chart in anticipation of looking for those high percentage opportunities early in the morning session. Let's get started. First thing I'm going to do this morning is I'm going to start right with an hourly chart. Now, I've got a number of different anchor charts that we can start with, but when it comes to an intraday trader, if I'm making my money inside today's trading session, the most active charts that I'm going to use are going to be 60-minute charts, 30-minute charts, and 15-minute charts. Now, the most important thing that we see off the 60-minute chart right now is that we are burying ourselves into these buy zones. You'll notice here the buy zones that we have showing up, right, coming off of previous swings here in the market. When you look at this 60-minute chart, you can see here that we are burying now into demand territory, right? So we got a bunch of demand territory here lining up, and you can see quite a few lows, quite a few support levels that are most likely going to cause traders to react. So as the price is moving lower this morning, we are burying ourselves into this buy zone. And what do we know about a buy zone, guys? We know that demand's going to enter the market, and as demand enters the market inside this buy zone, eventually these sellers, all of the supply is going to be absorbed by the demand. And when that happens, we're going to get a price reversal and price will retrace, giving us the opportunity now to sell it right back down. So this morning, the first thing this anchor chart, this 60-minute anchor chart, the first thing it tells me this morning is we are moving into a significant buy zone. And you'll notice with lots of room overhead and no room below, the likelihood of a short trade this morning will be higher risk. The likelihood of a long trade this morning, since there's more wide open space, will clearly be a little bit easier. So even though we have markets moving lower this morning, the path of least resistance is going to be long. Now, that may, of course, go out the window if we start to notice these sellers really in control. If we see market personality, okay, like we saw, didn't see yesterday, right? We talked about that yesterday morning. If we see price just continue to push and push and push, after a while, we're going to identify that as being very bearish personality, and we're going to be selling along with it. But my short-term outlook right now, though, is I am bullish, and not bullish because that's where I expect price to go, but bullish because that's where I'll be looking to take trades this morning as we bury into this buy zone. Again, I've got a buy zone all the way as low as 91.50, 91.41 down here. So we may see this price bury down in, and then we'll get that reversal. I can trade short. Just be careful when you're trading short. Make sure you look for those perfect trading entry patterns. When it comes to trading long, I'm going to be looking for that W pattern and losing it in on a W pattern, right, bouncing off this buy zone. Or let's go down to the faster time frame now, head down to the 5-minute chart, the VIP chart. I'm going to put all these charts up on the blog for you guys this morning, not to worry about that. And the first thing we notice here this morning is that the London trading session is a little bit narrow, so we do still have room to go. All right, I would expect to see a bounce somewhere around this 92.14 area. I'm expecting price will most likely try to go lower, but I am expecting a bounce somewhere around this 92.10, right, 92.15 area. And then we'll take a long trade back up to that trend line. We'll look to hold a portion of that position all the way back up. And you'll notice at the top of this range, We have the pit session lows, which Marty will be talking about soon. So let's go over the levels we have in front of us right now. As price moves lower, I have the current weekly and daily low of day, right? So 92.34 is the weekly low, right? The weekly low and the daily low. So look for a lot of support to come in. As you can see here, that's also the London trading session low. We have the reversal zone below us down to 92.14. Keep an eye on that 92.14. 92.14 is going to be that magic number, I have a feeling, here this morning. I might be wrong, but I'll be looking for a nice price reversal at 92.14 to 92.10. We see we also have a big round number down there too. That big round number, 92 even, we all know big round numbers are psychological price magnets. And since it's below us, we will assume that 92 will be support. Support levels below me at 92. I have a very important reversal number at 91.89. I've got reversal numbers at 92.14, 91.89, and 91.61. So we have plenty of opportunity here to look for price, again, to bury itself into that buy zone on the 60-minute chart, give us that W pattern, and then watch out. We're going to go right back up. I'm going to buy that, bringing it right back up. As we go lower, we have reversal zones below us. I have a final reversal number all the way down at 91.16. So if this ends up being a runaway market, like I said earlier, if we end up seeing this personality is really strong to the downside, which may happen, I'm going to take a look at the news here in just a moment, we may blow right through this reversal zone. Remember, guys, a candle closing below 92.14 will signal bearish sentiment, but I will not be able to sell short, in my opinion, until we get below 91.89. 91.89, that's where I'm going to be looking for short. And the reason I say that is it's a combination of the London trading session, knowing that we're in that buy zone. I need to make sure that we have the sellers in charge. So really, the buy zone for me can be extended right about here, 92.34 down to 91.89. Get me below 89, now we're talking. Now I can look to sell retracements. I'll take profit off at 91.61. And of course, the big target here will be 91.16. My path of least resistance is not selling short down to these levels. My favorite trade is waiting for the levels to hold, right? Because oftentimes it can be difficult to predict price breaking out. And I think you might agree with me, it can be a little bit easier to predict the reversal. We have certain things that we look for: speed, delta, reading our time and sales window. We have lots of different patterns that we look for that tell us when we have a price reversal coming. So don't be worried about trying to jump in these things short. Oftentimes, the best trade happens when price stalls at one of these reversals levels and then reverses, because that's when you've got that market balance out of whack, right? That's when you've got the bulls retaking control. So like I always say, be careful about selling short down into this buy zone. I'd be very, very happy, though, to see a price reversal at any one of these reversal levels, and I'd be looking for a price reversal back higher. As we move back higher here, we have quite a few levels above us that I want you guys to be aware of up top here, because in all reality, we may not just drop this morning. We may go right back up right now. I will be looking for buying opportunities as soon as possible this morning because we know we're in that buy zone. So I will be looking for buying opportunities right away this morning. Again, because we are in that buy zone. We're at the weekly lows. We're at the lows of the day. This is going to be a demand zone. Money Penny, good question. What do you mean by delta in the options? I'm not quite talking about delta when it comes to options. I'm talking about delta as it comes to buys versus sells. That's a great question, though. I'm not a big options guy. I don't watch options. So when I refer to delta, I refer to the difference between the buyers and the sellers at that time. Great question, though, Money Penny. Great question. As we move higher, let's not forget what we have above us today. We have yesterday's low of day that's sticking out like a sore thumb here at 92.72. Guys, be aware, we may get stuck in the mud at this yesterday's low of day. The previous low of day is such an important level for us. We know the previous low of day is oftentimes a reversal zone, but when it's right in the middle of the range, we know this yesterday's low of day, the previous low of day, we know this has potential to be a sloppy area. So don't be afraid, right? Don't be surprised if you see price stall out at this low of day from yesterday, 92.72. The reason it's doing that is because above yesterday's lows, we're bullish. Below yesterday's lows, we're bearish. On top of yesterday's lows, we have no direction. Now, whenever we see price going below and then above yesterday's lows, we know that tells us indecision. Okay, think about it. If the sellers were confident with lower prices, it would be below yesterday's lows. If the sellers were confident if the buyers were confident for higher prices, we'd be above yesterday's lows. We'd be above yesterday's highs. So when we're on top of the previous high of day or on top of the previous low of day, we can only assume, and we don't really need to assume, we know for sure there is balance in the market, right? There is balance in the market. And of course, we're going to have to wait for more information. As we move higher, we have the pit session lows at 93.04, a big round number at 93. This is a huge number for us. Marty's going to talk in a minute here about the pit session. The pit session lows are extremely important because if you haven't noticed, the pit is extremely important for crude oil. Not every market has an active pit like crude oil futures do. Okay, so we know the pit session lows at 93.04. That's going to be a price magnet for your longs. So use that big round number and the pit session lows at 93.04. Use that as a nice target. I will always buy the lows and use the highs as a target. This one just gives me even more reason to put that target right about 93.04. Don't forget, as we go higher, we do have the reversal zone above us, right? That is the reversal zone above us here. Price reversal zone below us, price reversal zone above us. As I said before, I will be looking for reversals in those reversal zones. In this case, though, we know this morning we're looking at a possible big bullish price reversal. So what I'm going to look for is I'm going to look for price to get above this reversal number one, above this 93.30 area, and I'm looking to buy. Okay, so buying above 93.30. I'm taking profit targets at reversal number 2, reversal number 3, and look what we have up here, the weekly open. Now, what would the weekly open be telling us? The weekly open is extremely important because when we go back to the weekly open, that tells us, again, the markets are in balance. The markets are in balance. Think about it. If we opened at 93.87 on Sunday night, I'm talking about Globex right now, 24-hour session. Okay, the electronic session opened on Sunday night, 93.87. You know if we can get up there, it's going to be a huge price magnet. So look for your runner targets today to be that weekly open. It's right below that big round number at 94. As you can see, right now, the market is in balance, right around yesterday's low of day. We're burying right into a buy zone on that 60-minute chart, which means we have tons of potential here for price to jump. And if it jumps, we know we're going to be looking to buy above 93.30, right? I got to use this reversal zone first. I will look for the reversal first. If it keeps on going, though, that's when I'll look to buy now, and that weekly open will be a great runner target. Don't be greedy. Take portions of profit off at 93.50. 93.87 is your runner. All righty? Looking good, guys. Looking good. Like I said, I am bullish here. Bullish, bullish, bullish. Unless we see this reversal zone break and unless we get below this 91.89, then I will be back to selling with retracements. That's it for me here on my end. A very detailed prep here this morning. Marty, I hope you're ready over there, my friend. What are you seeing over there, my man? Am I on the right track today? Are you seeing something different? What do you got? Take it from here.
So, I'm looking at your analysis and I agree. But the thing is, I have a couple other variables that I have to look at before I can really commit to one side of the market. So a couple things that just kind of hit the wire this morning that kind of get my attention. I'm looking at the API numbers that came out last night, the American Petroleum Institution's version of their inventory numbers, and they came out with a build in crude, quite significant, 4.4 million. Cushing, Oklahoma showed a 302,000 barrel build. We saw gasoline, a 1.5 million barrel build, and in your distillates, a 3.1 million barrel build. So builds across the board, you can see, pretty significant in terms of, you can see all our products are trading lower this morning as well. So as the products trade lower, that's an indication of lower price levels for us, right? So forecast for today's numbers at 11 o'clock due to the holiday, we're looking for crude to show 800,000 barrel draw. We're looking for a build in the Cushing numbers as well. Also looking for a 800,000 barrel increase in the gasoline, 600,000 barrel increase in the distillates. Now, talk about the other news that JJ's talking about here. We're looking at GDP at 8:30 along with jobless claims and pending home sales at 10, right? So we do have a lot of data that will move this market. Now, when I talk about Delta and the options, Mary, it's just I'm looking at on an options chain, I'm looking at skew, right, and at the main strike levels that we're trading at. So 92 half, 93 even, these strike levels, I look at the percentage of Delta. If it's over 50%, it's moderate. That means the idea of movement in the market. It's almost compared to volatility in terms of just on skew when you look at an options chain. So Delta, high Delta would be they're buying the idea of movement, nice movement associated with the market and the strike levels that they're trading at. And usually the Delta and the highest strike level open interest will be a magnet to price. So that's how we look at that. All right, let's get to the nitty-gritty here. Let's take a look at our first, our multiple market divergence. I got everything really just trading a little lower this morning. I have crude trading at 92.62, sorry, with 23% implied volatility. Open interest currently stands 309,945. With that here, you put the call ratios about 1.582. So what we're seeing here is normal volatility here this morning and somewhat of a sideways range. Now, I agree with JJ in respect that we will see somewhat of a balance form, and we can get into a range and we can reverse back up around that $93 level, right? The pit session low and settlement number 93.04, 93.11. So I can see a reversal up to there because they did fade the news, right? We faded the API numbers. It traded lower all last night. We can see us touch that 92 half level, and we can kind of reverse back up. So I'm thinking we have somewhat of a sideways range, but we are a little bit lower. I see the same exact thing in the Brent trading just below 102 at 101.69. I see your RBOB trading at 278.50 right now, 28% in implied volatility. Open interest 101,217, and your heating oil is trading at 284 half, down about 2 pennies so far today, and implied volatility about 21%. Open interest 98,611. You can see open interest is just a touch lower on all these markets this morning compared to yesterday's numbers and readings. So that's something to keep your eye out for, to just continue this bounce here. Basically, again, we can watch the sideways range. Now, if we do get a settlement below 92 bucks today, and say the numbers, the crude oil inventory numbers come out with a big build, no draw included, and we see more prices continue to trade lower and we're bearish. Anything below 92 bucks even, we get a close and settle below, we'll see 90. We'll be knocking on 90's door by tomorrow. But the thing that concerns me is this is the end of the month, and on the 30th and 31st, and the first full trading week of the month, we have cruise liner buying and we have jet fuel buying. So we're going to have random spurts of buying come into this market, and they're taking physical delivery of the product. So we can see little spurts of price action come in, and they bid it up real fast, and you might not want to be stuck short at that point. So that's the reason why I'm a little hesitant here to say I'm 100% bearish. Now we get below 92 bucks, the variable of physical delivery buying won't be as big as a factor. So I'm not too worried about it at the moment. Again, we'll keep our eyes on it. We'll look at our dollar index. You can see your dollar this morning trading just a touch lower here at 83.69 even. Euro currency trading a bit higher at 129.53, up 15 points. And let's just look at that Aussie. The Aussie's down by 31 points, 95.87. In Canadian as well. Canadian trades right now 13 bucks lower here at 96.63. All right, let's look at our spreads. Most importantly here, we're looking at your Brent WTI spread, a little tight this morning. Overall, that's very bullish when the spread is tight in contango right now. 908 trading on this Brent WTI spread. Let's just advance over to our other spreads here. I'm looking at your July to August spread, just about 30 cents. It's in the red by 8, so it's tight by 8. We're also looking at now your July to SEP spread right now. It's down by 8 cents as well, 8 ticks, 33. And we are also looking at our July to OX spread. It's actually in the green by 19 ticks, and we're positive 18 on that spread. So a little bit of a mixed reading on the spread front. Again, if you just look at the Brent WTI spread, it's bullish, and that would indicate that we can bounce off that 92.5, get back up to the 93 even, get that reversal zone, chop around until we see the number, and then you'll see the reaction from the number. So the plan of attack today is let's look for a quick buying opportunity by the reversal. Then what we'll do is we'll chop around the 93 even, and then we'll probably go lower, or depending on what our number is, whether we go higher or lower. So again, a very simple game plan of attack. It's going to be, I think, a pretty, as big as this day is, we're going to keep an eye and just try to keep it simple. All right, let's talk levels here, ladies and gentlemen. Again, for today, the 30th here, I'm looking at your pit session levels from yesterday here, and what I got for you is previous high day here. Previous pit session high, 95.22. Your pit session low, 93.04. Close and settle, ladies and gentlemen, 93.11. Right now, as I look at your daily pivot today, I got 93.79, sorry, 93.79 is your daily pivot. Resistance above, 94.54, 95.97, and 98.15. A little bit of support down below. I got 92.34, which can also be another reversal zone, 91.61, and 89.43. So those are my levels here. We're looking at open interest. Currently stands 315,205. Again, that's lower from yesterday. We had a net change yesterday of about $1.25, of course. Implied volatility sits at 23%, as I mentioned. The OVX sitting at just about 24.04. You can see the largest strike levels that were traded in the pit yesterday. 7,095 calls were bought. Again, 7,095 calls were bought. These are July 95 calls. On the downside, they really shore up the downside with size associated with it. You can see we're just 6,090 puts and another 6,084 half puts traded in the pit yesterday. So they shore up the downside in a big way, but not as much as the upside. Again, you can see just off by about 1,000. All right, let's look at natural gas real quickly. As you can see, remember we were talking about buying natural gas last week, and you can see in reaction what happens. We had expiration of the June contract yesterday in natural gas, so we can continue to watch it. Inventories really affect price. We're looking for a build to 85 BCF in natural gas, but I'm really thinking that supply was a big factor this week with the warmer weather and the cooling demand coming into play, so we could see just our market probably trade higher. Again, pit session high from yesterday, 422.30. Your pit session low, 411.80. Close and sell at 417.90. Daily pivot today, 417.30. Resistance above, 422.80, 427.80, and 438.30. Support down below, 412.30, 406.80, and 496.30. Largest strike levels traded in the pit, 6,296, 410, 420 call spreads, and 410, 420 calls traded in the pit, along with the 2,150 405 to 400 puts trading in the pit. Now there's no put spread, but there was a call spread. There was a 415, 410 call. 410, 415 call spread, and a 415, 420 call spread that the locals really favored yesterday. So that would give us promising activity to the upside. So I'm going to be with the locals on this one. I'm thinking here before the number, they were doing something really smart yesterday. They're buying these call spreads of 410, 415, 415, 420 for real cheap prices. They were getting them for a steal yesterday. Today they're going to be a little bit more expensive. So they bought them yesterday, implying that we're going to have somewhat of a draw or lesser than expected build in natural gas, implying that the market will go higher. So again, that's really what they're looking at here today, the locals at least in terms of the natural gas pit. For the crude, again, we're going to have to watch how they position themselves before the number. And that's about it, guys. From here, again, we're going to be keeping our eye on the multiple market divergence today. We're going to be keeping an eye on our levels here this morning, and we're going to be watching what the locals and paper are going to be doing all morning here. Again, that's about it over here on the trading floor. I'll see you all in just about 50 minutes here for my broadcast, and I want to thank you guys for joining us here this morning. Again, I'm going to give it back over to JJ now.
Awesome job, Marty. As always, great to have you here with us. Boy, I love it when Marty touches on the aspects coming into the end of the month. Now, where I come from, the end of the month in crude oil often means a big short, a big selling opportunity. But it's great to see Marty give us a little bit different, different viewpoint of this, because he's absolutely right. You got to think of all the other consumers of crude oil, those cruise ship lines, those shipping companies, those airliners. So many different dynamics. Boy, I learn something new every morning when I listen to Marty and Jeffrey on that broadcast at Traders Audio. The insight they give me as a relatively inexperienced pit session trader, right? I know my way around charts all day long, but to learn about what's happening in the pit is really in my opinion, it's a very valuable thing. So Marty, thank you so much for all your hard work out there. We have a ton of news here this morning, guys. So remember to set your alarm clocks this morning, 8:30, 10 o'clock. And we got that oddball 11 o'clock news this morning. So don't forget, a little bit funky morning schedule here. So trade around it. Remember, those inventory numbers are going to be dangerous the few minutes leading up to it and the few minutes afterwards. So be patient around 11 o'clock today. All right, guys. Thank you so much for coming out and joining us. As always, 7:30 a.m., we do our morning prep. We go from the screen to the floor. That was Marty Errico from Traders Audio. I'm Joseph James at School of Trade. As always, it's a pleasure to have you guys on the broadcast today. We'll see you guys. We'll be on a 23-hour break here. We'll see you guys in 23 and 30 minutes. We'll see you tomorrow. Adios, amigos. Bye-bye for now.